Hi there, this is Bill with Smart Trades. Today we're going to take a look at the S&P and the spiders as well as gold. First of all, looking at the S&P spider 60-minute chart, and I want to bring your attention to the overall pattern, which developing so far could be a wedge with 3 waves completed to this point. We need a decline down to the bottom of the channel, and then one more rally, which would fit nicely with our longer term target, which is 1099 basis the S&P and about 110.35 on the spiders. So far, the advanced decline line here on this middle subchart is fairly good. This is indicative of the probability that we are going to get a little more rally short term. On the other hand, we are at the top of this channel. The market's a little bit overbought, and you tend to get at least a little bit of a pullback from somewhat overbought internals like this, but usually those highs are exceeded. Also, I'd bring your attention to the overall declining volume on the rally. The market has been up, obviously, but the volume is not confirming that rally. Moreover, the spikes in volume have been on the moves down. This is an indication of distribution and overall is bearish for the market. Okay, looking at a 60-minute chart also of the S&P futures. Again, the same overall volume pattern of a declining volume overall on the rally up, with spikes on the moves down. The red volume bars are for down bars, and the green obviously are for up. And you can see this has actually persisted for some time, where the bigger volume has been kicking in on the moves down, and the rallies have had subpar volume, relatively speaking. Again, we have that wedge pattern. We could go a little bit higher and then down to the bottom of the wedge, and then one more rally, ideally basis the cash around 1099. Here's the spider daily chart, and a particular note here is looking back to October of 2008. We have a gap, a very significant gap that is yet to be filled. That comes in on the spiders around, again, 110.35, basis the S&P. That's around 1099, and we're heading up there. We're just a stone's throw away, and the short-term pattern is also clicking into gear. Also, I'd like to bring your attention to the overall pattern of this rally. It's what Elliott calls an ABC. At least that's what it looks like so far. The internals of each leg up are overlapping and more than likely corrective in and of themselves. Moreover, we're heading towards a near equality here of leg C and leg A, which is typical Elliott 101 relationship. And the volume has been dropping throughout this rally, not only in the short term, as I showed on the previous charts, but also in the longer term pattern. And here's the internal breakdown basis the S&P cash. Long story short, pun intended, this market is looking more and more terminal. You can count a resolution again just shy of the 1100 area, and 1099 being the focal point. I would give it a little bit of space, 1090 up to perhaps 1110, but 1099 is the ideal target. And we have multiple relationships, both with the internals, which I won't get into, the relationship of this first ABC to the second ABC, as well as the relationship to the larger A and C legs, in addition to this small a and the small c in this final move. All of them are pointing to that 1099 area, plus or minus about 10 S&P points. And finally, here's a chart of gold. Gold has been actually tracking the market. As the dollar's declined, gold and the stock market have rallied. And basically the pattern in gold is also an ABC off of the August lows. We have a rally up to A, a corrective decline to B, and then a very nice clean 5-wave structure up, at least it's developing that way, off of the late September low. The final leg up is also developing into a possible wedge, and just another relatively small rally would take us to the top of that wedge right at around 1079. Now 1079 is where C will be equal to A. Again, that's a typical classic Elliott wave relationship, and we'll see how it develops. But right now, looking for a top in gold at 1079 and a top in the S&P at 1099. We want to see it when it gets there. Look for volume and breadth divergences. Breadth, obviously, in the stock market. If we get those, we'll probably be looking to go short. The S&P at 1099 and gold at 1079. Thanks for watching. Have a great day, and I'll try to update this after we see what happens when we get to those targets, if indeed we get there. Thanks. Bye-bye.